Let me welcome Nikhil Ranka, who is the CIO of Equity Alternatives at Nuvama Asset Management, joining us on the show. Nikhil, hi, afternoon, and good to be speaking with you. And Nikhil, like the same question, because yes, the index is one day up, the other day down, and a lot of the sector churning that is underway, and that's one of the clear trends that we are picking up. The earnings that are disappointing, they are getting hammered in a big way, while in some of the other sectors which were beaten down, case in point being autos, ITs, they are trying to make a comeback. What's your reading on the markets right now?
So, good afternoon and thanks for having me on the show. So, broadly, 1 month back when we were on the show, we were a bit cautious on the markets from 25,600, 25,700 levels. And at that point of time, we clearly highlighted that, the best case for markets is time consolidation here because the incremental upside based on an FY27 valuation was looking more like 26,200 to be the fair value of Nifty. We've corrected almost 1,000 points from those levels. And the good point is, now we at least have closer to 8-9% upside on our fair value of 26,200. And if we look at individual sectors, in case of IT specifically, if you look at it, most large cap names are now down to less than 20 times FY27 earnings. And these are the levels that they had hit when the tariff uncertainty was at their peak. So incremental downside from these levels seems limited in IT names. Similarly, if you look at the banking sector, the street has now very well built in that Q2 again will have 10 to 15 bips NIM decline because Q1 had 10, 12 bips. And if you hear the commentary of most of the large banks, what they have said is the first rate cut has been completely passed on, and the second rate cut of 20 bips will get passed on in Q2. So there will be further NIM impact, and so Q2 also should be a soft quarter from an earnings standpoint. But Q3 onwards, we expect earnings to pick up, and markets also should start trending higher from these levels, is our view. Incrementally, we don't see downside in markets below 24,200 levels in that sense.
Okay, so that's the take on that. But let's move away from that. And in fact, let's focus on select auto stocks that are doing very well today. Shivangi, want your sense on some of these stocks on the charts? Case in point being Maruti, Hero Moto. Both of them are seeing gains of about 2% in today's trade. And M&M is also not too far behind. What are some of these stocks shaping up to be like on the charts? And where are you liking or where are you seeing value on the charts at least when it comes to the auto space?
Talking about the auto space, shifting gears can be seen in Hero MotoCorp. We've seen that this one has consolidated from a long time on the weekly basis. And we've seen the nature of the stock is to rest after a breakout, which has happened earlier this week. And we've seen a good pullback from the retracement levels as well. So now, again, attempting to, soar higher. So this one is definitely on radar. And in fact, the two-wheeler space is looking quite positive in among the entire auto pack. So this one should definitely do good. 4850 is the next targets that we're looking at for Hero MotoCorp with a support of 4570 levels.
All right, so that's the take coming in on the auto counters. And yes, Hero MotoCorp remains to be the consensus buy from both of our experts then. But along with that, as India gears up for the festive season, optimism is running high across the key sectors. In hospitality, demand continues to outpace the supply, keeping the momentum strong for players like Indian Hotels. The auto industry, backed by a bumper harvest and the recent repo rate cut, is eyeing robust sales, with FADA expecting a record-breaking festive run. And in the EV space, Group Shaman Cars sees infra upgrades, innovation and rising disposable income accelerating the adoption. From travel to transport, the festive cheer looks set to charge India's growth engines. Let's go across and listen in.
I think hospitality, aviation, and tourism are just going to rise in India, and its contribution to GDP and its contribution to employment. We are just at the beginning. Okay. All those who have looked at this sector as a cyclical sector were not wrong, But if they continue to think that way, will become wrong, because yes, there is cyclicality in it, there is volatility in it.
The upcoming festival season, yes, we are quite optimistic, especially with the bumper harvest which we are expecting post the monsoon. We all are hopeful as far as the auto industry is concerned that this is going to be a bumper festival season for us.
There is an uptake in the EV space. Whatever the products are on offer are getting lapped up. Maruti, you mentioned, but I think it's driven more by the Mahindra and Tata's in that segment. And the adaptation is increasing. Earlier, there was a little bit of anxiety on the EV sector, which currently I'm seeing that it's reducing. I think it should be a larger number percentage growth in that EV segment, certainly.
Okay, so that's the word coming in from a lot of these automakers as well as Puneet Chatwal of IHCL, trying to gauge where this entire festive demand, the upcoming wedding season, could pan out for our economy. But Nikhil, on that note, what kind of push do you think this upcoming festive season, the wedding season, and of course this very near term, this long weekend that we have coming in, what kind of push do you think it could give to quick commerce, to hospitality, to travel and tourism? Where are you thinking, or rather, where are you seeing all of these sectors headed on the back of now good festive period coming up?
So on the aviation side, if you look at it, Q2 typically is one of the softest quarters. Historically, if you would have seen, there's a significant yield decline quarter on quarter in Q2 as compared to Q1. So on that basis, I think Indigo should have a softer Q2 numbers. The only good part is there's a meeting between Mr. Trump and Putin on the 15th of August, and if some sort of solution comes out, then obviously the uncertainty of disruption or sanctions on Russia goes away. And to that extent, if crude prices collapse from these levels, $4-5, that should be a benefit for some of the aviation guys. On the two-wheeler side, if you look at it, broadly what we have been seeing is single-digit volume growth for the last 2-3 years for most of these guys. And given the trends that we are seeing, I think we should still continue to be in single digits for most of the two-wheeler names in terms of volume growth for FY26. However, we do expect that there will be some margin expansion because steel prices have cooled off a bit in that sense for two-wheeler players. And stocks have also corrected in that sense from their peak valuations. So on an FY27 basis, for example, Hero is now trading closer to 17-18 times. Bajaj Auto will be closer to 22 times. So I think there is another 10-15% upside that could come in these names. But beyond that, it will be difficult to build in given that we are still expecting single-digit volume growth for most of the two-wheeler names in FY26.
Okay, so that's the take on that. Just want to mark where the markets are right now. 24,487 on the Nifty. We've slipped below that 24,500 mark as well. A similar cut coming in on Sensex, close to a 0.5% cut is what we're seeing. India VIX once again slightly in the green, so that spike up has begun for India VIX. We have about 10 minutes of trade left. So let's see where India VIX closes today at the end of trade. Nifty Bank, in fact, taking a deeper cut right now, an 0.8% cut. You have Nifty Mid Cap also in the red, small cap absolutely flat right now. So that's the state of the market. Sharan, still optimistic on the positive open tomorrow now that we are below 24,500.
See, Sneha, as I mentioned, I think India is waiting for some kind of global news, and that's 2 days far away, I think on 15th of August. So you can expect some kind of pullback. Again, it's not that bad. We have already discounted 50% kind of tariff, and any news that will come from this meeting, I think will be on the positive side rather than the negative. So expect some kind of positive pullback. Yes, today you have seen witnessing some kind of selling, but one positive is the volumes are on the lower side. So the selling is not that strong. So volumes are even lower than yesterday's whole day volume. So again, expect some kind of pullback to the 24,600 odd mark. I don't know which sectors will lead that, but looking at the auto sector and even the PSU banks, I think you can expect some kind of recovery. Again, HDFC, ICICI one of the biggest point contributors towards the downside. So expect some kind of recovery on those stocks. So for me, 24,700 is the level to watch. I think if Nifty starts moving above that, you can expect a good short covering rally to 25,000 odd levels.
All right, so that's the take coming in on the markets right now and the likely open for tomorrow. But Shivangi, before we shut show, one of the other counters that is heading for a weak closing rather, it's actually Bajaj Finance. Of late, we have seen a couple of these downgrades coming in from foreign brokerages on Bajaj Finance. Almost a 3% cut in today's trading session. A little surprising, but what are the charts telling you?
Bajaj Finance, the charts are telling me that, that has broken an important support level, and we've seen that, this stock has kind of added up on the call writer side. It's trading below its, key important levels as well, and a consolidation of the last trend trading session, was seen, of which the lower band has been breached. So some more pain point can be seen in this one before it again recoups for another fresh leg of rally, but would be a wait and watch here for this one.
All right, so that's the take coming in on Bajaj Finance. See, in the last 1 month, the stock is down over 8%. But along with that, in some of the upcoming earnings, all eyes will be on Apollo Hospitals as well. And this time around, we are expecting a good set rather, because when it comes to the segmental performance, both from the hospital and the pharmacy business, we are expecting a double-digit growth over there. While in terms of the profit, that's expected to see a jump of 29% on a YY basis, but just absolutely flat growth on a sequential basis. But well, of course, on to the management commentary. All eyes will be on how they see the margin expansion in their pharmacy business rather, and specifically the online pharmacy side. What is that doing? And the commentary with respect to the ongoing capex and the upcoming capex as well is something that we will be watching out for. So good set rather expected from Apollo Hospitals. But Nikhil, just wanted to have your take on the hospital pack, because amidst this lot of uncertain times with respect to tariffs, slower growth prospects, hospitals as a space is a more domestically oriented, and along with that, the management commentary so far from the other companies is quite good. Do you believe that Apollo Hospitals is the place to be, or rather is one of the preferred bets right now in the market?
So hospitals clearly has benefited from the shift to the unorganized to the organized sector in that sense. So as we have seen the penetration of medical insurance increasing, incrementally people prefer to go to multi-specialty hospitals, and because of which what we have seen steadily is not only have occupancy levels inched up for most of the hospital players, but we have seen high single digits steady uptick in the ARPOB as well, which is the operating revenue per bed in that sense. Because of which, we have seen hospital stocks consistently compounding their operating profits at between 15 to 20%. In the case of Apollo specifically, they have decent expansion targets, and also they want to list the 24/7 venture separately, which should lead to some sort of value unlocking for Apollo Hospitals. And the stock is not very richly valued, closer to 22 times EV EBITDA multiples.
Okay, I believe we'll just repatch that line and wait for his take on that. But let's shift focus from equities to macros. And as the street awaits inflation data numbers to be released at about 4 p.m. today, in a short while from now, let's take it across to my colleague Varun to understand what the polls are indicating on the same for CPI and core CPI too. Varun.
Well, so the Reuters polls actually expects the CPI number to come at around 1.76%, and this would be the 9th straight month where we are seeing a decline in the CPI number, and in fact a 6th straight month where we are seeing the CPI number below the overall tolerance level of RBI, that is around 4%. And this time the CPI numbers are expected to fall below the 2% mark, that is around 1.76%. If you look at the overall numbers, it is the food inflation that is going to impact the overall CPI number, because it's the vegetable inflation which is on a declining trend, and that would impact the overall CPI number. Also, if you look at the rural and urban CPI number, they have been on a declining trend, and we are expecting them to decline in this month also, that is in the month of July as well, and that will impact the overall CPI numbers for the month of July. Also, if you look at the core CPI number, they are expected to moderate to around 4.22% in the month of July. So overall, if you look, the CPI numbers are expected to decline for a 9 straight month, and they are expected to come at around 8 years low, that is around 1.76%.
All right, thank you so much, Varun, for getting us all those details. So once again, a cool off in the inflation print is what we are expecting this time around. So let's watch out for that. But along with that, with respect to the CPI numbers as well, we also had a word with Sonal Verma, Managing Director and Chief Economist, India and Asia ex-Japan of Nomura, to discuss how they expect both the retail and the core inflation to shape up for India in the month of July.
Headline CPI, we're expecting a moderation to 1.3% from 2.1%. So actually going below the RBI's 2 to 6% tolerance band. And we think it'll be driven by a combination of both food inflation getting into a deeper deflationary territory, plus a moderation in core inflation. So core, if you recall, had popped up to 4.5% in June. That was partly because of the impact of gold prices, some of which has reversed. So we are also expecting core inflation to moderate to 4% from 4.5%. While tariffs are, inflationary in the US, they are actually disinflationary in rest of the world, including in India. Partly because of this tariff impact and what it does to China's overcapacity and some of that hitting other shores. So it is important, but I think for India, we think disinflation is going to be the big theme.
Okay, that's the word coming in from Nomura in terms of what to expect from the CPI this time around. Shivangi, before we let you go, as we start winding down for the day, just a very quick take on what levels we can see at open tomorrow. Okay, we've lost that line with Shivangi. Let's just start winding down for the day. And I believe my colleague Ashesha is with us to take us through how the trading day has panned out to be like today. Ashesha, over to you.
Well, yes, we only trended lower in the second half of today's trade. Nifty is ending with some amount of losses, 100 points down for Nifty 50 to end near that 24,480 mark. Nifty Banking Index, that one in fact was underperforming in trade today. That one should also come up for you on your screens. Nifty Nifty Small and Mid Cap Index, the broader markets were also under pressure today. Nifty Bank was down nearly 450 points. In fact, it is ending below that 55,100 mark. Nifty Mid Cap Index down 0.3% as we speak. Nifty Banking Index down 0.8% in trade. In terms of individual losers, we had Bajaj Finance. That one is ending with a downtick of nearly 3%. This is the biggest loser on the Nifty 50 index, followed by Trent and HUL. These were also some of the other laggards, ending the day with a downtick of 1 to 1.5% in trade. That's Trent for you, HUL 2484, ending the day with a downtick of 1.4%. In terms of individual gainers, we had Maruti Suzuki, which is up nearly 2%. The biggest gainer on the Nifty 50 index, that's one for you, 1284, 841 is where it is ending for the day. Tech Mahindra and M&M were also some of the other gainers from the Nifty 50 pack. In terms of individual sectors, we had Pharma Index, which was bucking the trend. In fact, it was the biggest sectoral gainer in trade today. Alchem Laboratories is ending the day with an uptick of a solid 6% after it reported very strong set of numbers, 6.5% higher for Alchem Laboratories. Biocon was up 4%. Granules India is also ending the day with an uptick of nearly 3% in trade. On the losing side, though, real estate stocks were under pressure today. In fact, Nifty Realty Index should also come up for you on your screens. That one is ending the day with a downtick of nearly 0.5%. Nifty Realty Index 0.8% shaved off on that counter. Godrej Properties, Prestige Estates, DLF, all of these stocks lost anywhere between 1 to 2% in trade. Godrej Properties down 2.2%. DLF and some other real estate stocks were also under pressure today. In terms of individual stocks, let's put the spotlight on Alchem Laboratories, and as I mentioned, it reported very strong set of numbers. Revenue up 11%, profit after tax saw an uptick of nearly 22%, and margins also expanded to come in at about 21.9% versus 20.1%, 6.5% higher for this counter. Granules, again very strong set, revenue saw an uptick of 3%. Granules India is also ending the day with an uptick of 3%. Both of these stocks are the biggest gainers on the Nifty Pharma Index today. Astral, meanwhile, reported very weak set of numbers. Revenues fell by about 2%. EBITDA margins contracted to come in at 13.6% versus 15.5% that the company reported same time last year. Hindalco, this one reported its standalone numbers during the day. Praj Industries, in fact, that one is also down 7%. Praj Industries numbers were weak. Management commentary was also cautious. In fact, they said that second quarter is also expected to be on the weaker side. So that one lost nearly 7% in trade. So all in all, it was a weak day on Dalal Street. Nifty is ending with a downtick of nearly 0.4%, below that psychological mark of 24,500. But that's all the time we have on this edition of the show. More news and updates will continue on the other side.